Good morning, ladies and gentlemen. My name is Vasil, Senior Account Manager with GDMFX, and I'll bring you today's morning outlook. We'll start with the North American markets. We had the pending home sales for the month and the year. They came out 0.9% better than expected to 1.4% for the month, and 0.7% higher than the previous at 1.4% for the year. Initially, the dollar jolted higher against the main rivals Wednesday afternoon, but returned to its levels from before the announcements as investors judged that the Fed has offered little new information about its plans for raising interest rates. Investors also noted that the Kansas City Fed President Esther George again voted to raise the Fed's benchmark interest rates by 25 basis points, which she first did at the central bank's March meeting. The Dow was 9 points up, the Nasdaq 26 points up, the Dixie was down to 93.88 from 94.77. The US dollar dropped down with 308 pips versus the Japanese yen. This was the biggest mover. Today we're waiting for the annualized GDP for the first quarter, the GDP price index for the first quarter, core personal consumption, expenditures for the quarter, personal consumption, initial and continuing jobless claims from the US. Moving on to the European markets. We had the German import price index for the month. It came out 0.4% better than expected at 0.3. The German import price index for the year was 0.4 better than expected at minus 6.3%. We had the German GfK consumer confidence survey was 0.3% better than expected at 9.4%. And from Switzerland, UBS consumption indicator 0.06 more than previous at 1.45. The European Central Bank isn't concerned about the recent strength of the Euro, ECB board member Benoit Coeure said in an interview published on Wednesday. The euro rose with 0.3% against the dollar Wednesday to 1.1329, up from a second day in a row. Europe's single currency is 4.2% higher against the dollar since the start of the year and is up about 3% since March 9th, the day before the ECB announced further stimulus measures. The DAX 30 opened with a down gap of 48 and it ended up with 95 points total. The CAC 40 is up with 30 points. The euro versus Japanese yen ended up with 72 pips and is down with 250 pips today. The euro versus the Australian dollar up with 318 pips now. It's 16 pips down today. Today we're going to wait for the German unemployment change and unemployment rate, the Euro services sentiment for April, the European consumer confidence, the European industrial confidence, and the European business climate. We're also going to have economic sentiment indicator from Europe and from Germany, consumer price index for the year, and also consumer price index for the month, also harmonized index of consumer prices on a monthly basis, harmonized index of consumer prices on a yearly basis. And that will be it for today. On Friday, we're going to have the consumer price index core for the whole of Europe and consumer price index for the year. Moving on to the United Kingdom, we had the GDP for the first quarter of the year 0.2%, weaker than expected, 0.4%. The yearly GDP reading was 2.1% as previous. Now, speculations that investors are overlooking economic data and are solely focused on the Brexit referendum have received confirmation. Yesterday, the GDP data showed that the UK growth has slowed down in the first quarter of 2016. However, sterling fell only with 0.3% versus the dollar, and it is still trading above 1.4580 per dollar at a level branched on Tuesday, when the poll gave the anti-Brexit campaign a major lead against the separatists. The Brexit debate is completely dominating the financial sphere. Bank of England Governor Mark Carney again touched on the subject, giving projections on how the pro-Brexit vote will impact the economy and the currency strength. The FTSE 100 gained 56 points and closed at 6,278 yesterday. The pound versus the yen closed on a dodge yesterday, and it is 410 pips down today. The pound versus the Aussie 310 pips up yesterday, 455 pips range. The pound versus the Kiwi 160 pips down yesterday, 400 pips range. Today we're going to have the GfK consumer confidence from the UK. Moving on to Japan. The biggest surprise was the Bank of Japan's decision to keep interest rates unchanged at minus 0.1 and not introduce new stimulus measures. Policymakers are betting that their success in bringing down borrowing costs since unveiling the negative rate strategy in January will generate an acceleration in lending. They left unchanged three key interest easing tools: the 80 trillion yen target for expanding the monetary base, mostly through government bond purchases, the 0.1% negative rate on a portion of the cash banks park at the Bank of Japan, and a program to buy riskier assets, including stocks. Separately, they postponed their time frame for reaching a 2% inflation target to sometime in fiscal 2017, for a further delay in about a year. Coeure wanted to make it clear to the Bank of Japan to won't make monetary policy driven by market demands. It is too early to make another move after implementing the negative rate a couple of months ago. Bank of Japan will be data dependent and is expected to bolster more stimulus at the June meeting. The Nikkei 225 slid with 920 points after the decision. Now it's hovering around 16,890. The Swiss franc versus the Japanese yen was down with 280 pips. The Aussie versus Japanese yen 230 pips down. Canadian versus Japanese yen 230 pips down. Kiwi versus Japanese yen 190 pips down. Foreign bond investments in Japanese stocks added another 100 billion yen, indicating capital inflow. Industrial production improved with 0.9% on a yearly basis and 0.7% for a monthly basis. Overall, the CPI declined versus previous reading. Bank of Japan's target is 2%. The retail trade for the month was 3.4 better than previous at 1.4. Retail trade for the year 0.4 better than previous at 1.5. In the Pacific, the Royal Bank of New Zealand interest rate was unchanged at 2.25%. The Royal Bank of New Zealand also decided to keep interest rates unchanged as expected, but Governor Wheeler reiterated that further easing may be needed. As we predicted, he's also added that further Kiwi depreciation might be appropriate in order to boost inflation. While he shared that they've still got plenty of uncertainties with their economic outlook, Wheeler also pointed on that New Zealand is getting support from migration, tourism and construction. For now, the nation's dairy sector is still facing difficult challenges and housing market pressures could also pose risk. The Aussie was 150 pips down versus the US dollar. The euro versus the Aussie was 310 pips up. The Aussie versus the Japanese yen had a 390 range down since yesterday. The Aussie versus the Swiss franc 210 pips range down with 50 today. The Aussie versus the Loonie 60 pips up today, 290 pips down yesterday. The Aussie versus the Kiwi 310 pips down, looking to reverse today, but the bulls are still missing. The Kiwi versus the Japanese yen 150 pips range and 210 pips down over the Asian session. Moving on to the commodities, the S&P 500 index had a range of 18 points. It is at 2,075 right now. Gold had a range of $13 at 1,255 right now. Silver had a range of 36 cents down to 17.35. Crude had a $1.80 range at $45 right now. And natural gas is trading at $2.11 at the moment with a range of 60 cents. Today, we're going to have the EIA natural gas storage change, and on Friday, the Baker Hughes order account. Thank you and have a nice day.